Hey guys, hello everyone, welcome to my live. So I hope everyone doing great today. I think first and foremost, I would like to check out all of your comments. Then we'll look forward to the market and what to expect from the market. I will let you know. So first thing, when we look into the market today, we get some more selling pressure. But already yesterday itself, I have told you about the CPI data. So we need to that data needs to be in a lesser level to get the rate cut, isn't it? So that is what yesterday I have mentioned. Let me give you clarity, which is a CPI. Where the rate cut is optimism, we can expect the bullish for crypto, and right now the rate cut is optimism. Okay, so as we are looking into the market, so market has started reacting negative. So this is a very major correction before start to react in a bull run, because we have the rate cut. So sooner, within 4 to 5 days, we're gonna see the rate cut, right? So before that itself, we can see that the market gonna react in a positive. So that in between that, we are seeing some more market correction again. So this market correction will get to change so sooner. BHA, hi, welcome Zab. Hello Zab, welcome to my live. Glad to meet you everyone, guys. So follow me, who are not yet followed. Please give a follow and leave your comments in the stream. So right now we have seen the support too, but I think from this um, moment, still the color shade was not a change from the rainbow channel indicator that we are seeing. If the color is still sustained, we can expect the full red, which also expected to change the color shade towards the bluish tone we can expect from the market. So let's wait and see how it's going to be move further. So, risk premium is basically the extra return you expect when you choose an investment that is riskier than just keeping your money somewhere safer. So, there are different types of risk premiums depending on things like market volatility, the chance a borrower won't pay back, which is a default risk we have, or how hard it is to sell an asset, which is in a liquidity basis. So understanding this risk premium can help the investors, and it will help you guys to sort out which investment might be worth it based on their investing style and the risk profile also. I will try to explore this, so stay tuned with me. Investing, it's all about trying to get a good return without taking more risk than you can handle. Yeah, that is so important, because if you can't handle that risk, why you have to take that? Yeah, isn't it? Many people are investing without analyzing the risk involved into that, and because there is lots and lots of risks involved into the crypto, and the main method to avoid the risk, I always mention, it is a dollar cost averaging. That also you need an extra that is investment. If you are planning to invest $1,000 or $2,000, first thing you have to plan those assets to split it first. Just try to split it, different parts. First, if you want to invest in a certain coin, just focus on it. And in when it comes to the crypto, you can't invest in a single coin itself, because when if it is a odd season or normal, it will not be, people will not will only focus on the single coin. If it's a Bitcoin or Ethereum, that is not a problem. But if you're looking into the altcoins, it's of course you have altcoins or meme coins. The thing you need to do is always you have to invest in a multiple coins, not in a single coins. And even if it's a multiple coins, just split your amount. And even for a single coin token or coin itself, you have to split the amount. If you wanted to invest $1,000 into the single project, that what you need to do is first just try to invest $100 or maybe 50, and then wait for the market to react. Because after the investment, suddenly the market will not give you pump, and suddenly sometimes it will give a negative. So that is unpredictable during this that is high volatile time period. So that is not predict, no one can predict. So many times we also notice the same kind of movements also happen. So at that time period, what you can do from that is, of course, you may take a dollar cost averaging. That is so helpful for you. And even that is not a final dip. Okay, that just remember always, whenever you are investing, keep on investing in a single coin. It's not a final dip for it. Anytime that dip is keep on get to increase. So you can see that negative will keep on change. So every month you can see the different changes. Try to invest a few more, try to make a dollar cost average every month. If the price dropped, try to invest again. So that's a way you can do. Don't try to invest everything at a single time. If you did that, then of course no one can help you to avoid the risk. This is main strategy you can use if you're a long-term investor, and this is the main strategy you have to use. You must need to aware about this. And many people who are trading, they are not even aware about this kind of um, method is there. So even that I'm sharing these things, I have learned it, of course. So everyone will learn from the mistakes what we did already know. So I too learned it from the mistakes, and that's why I'm sharing it with you. Okay. Okay. So I think you may aware about this risk management things. So many risk, not only this is a one management is there, many risk management is, but most probably this is gonna help for the long term hold. Sorry. So long term holders, this is so helpful for you. But then many people also have the query, if I'm a short term trader, like I'm trading in an intraday basis, and what could I do? Many people have that question too. So for the short term traders, that is, if the people will trade on a futures, so probably short term traders will go with the futures. So for them, what I will suggest is use a stop loss and take profit. That is the only thing we can do. So to avoid this negative, that is avoid the loss in a spot, we have an option called dollar cost averaging that we can do. But for that also we need a amount again to average whatever the loss we are having in the um, coins, whatever it is. So and but for the futures in an intraday basis, the only thing you can do is stop loss. And there is two kinds of futures trade. One, you can go with isolated or cross. That's your wish, that you can prefer whatever a trading method you want, because it's depends up to you, which is kind of how much the investment you can do on the futures. That's your wish. And on the futures you can two things you can do: try to avoid the higher leverage and use a stop loss and take profit. Even people will think this is a simple thing. No, yes, it's a simple thing. And even this simple strategy is also may not many of us using. That I'm damn sure I have even everyone, because if if the market has reacted a little more positive, one can close a profit. One will go for the take profit. Still, they need a bigger profit, isn't it? So that may lead that sometimes it has high volatility. Crypto market is famous for the high volatility, no? So that may leads the coin price to drop very suddenly. So that time period you may bother a lot. So that's why we need this kind of precautions, um, that we have to do this kind of precautions that may help you. Okay, so that is why I wanted to share. So yes, let's continue with this kind of risk premium. So some assets, those are considered safer than others, like government bonds or gold. On the other hand, investing into the things like stock markets, cryptocurrency, or real estate, that usually means accepting higher risk. But even real estate, I won't say it's a higher risk, because the higher risk is trusting. Because if you're buying anything, any real estate, anything, land or whatever, so buying that, it has a risk of trusting somebody, because the new people you are trusting, no? So we don't know anything about the land or whatever we are buying, no? So that has a little more risk also involved into that. That's a way we can say it as a risk, because if you invested and you are gonna within a few years you're gonna see the huge profit from that. And which kind of place you are investing, that's important, whether it's a developing place or still it's going to, it's a rural part. So everything we have to see, right? So it's because based on that we can see whether it's a high risk or not. But stock, cryptocurrencies, everything, for sure we have the high risk. Even though if it's a trusted coin like BTC, Ethereum, we have seen that, right, many times. And we are seeing it very lively all the days. So it might be so easy for us to predict. Yeah, so the risk premium is a handy idea that helps guide investors as they look for ways to grow their money while keeping an eye on a potential risk. Okay, so let's deeply dive into this risk premium. When you put your money into riskier options, there is a natural expectation of better returns. That extra bit you are hoping to earn compared to the safe investment, that is what we call the risk premium. So this is basically the gap between what you hope to earn from a risky investment and what you could earn from a safe one. For example, if in the US government the treasury bonds are considered as safe because the chances of a government default are low. So if you decide to buy into something less predictable, you want to get paid more for taking on that risk. So that difference is potential returns between the safe bet and the risk choice to the risk premium. Okay, right. So why this risk premium matters? I will try to give you clarity why this kind of stuffs are matters. Okay, so the main reason investors care about risk premium is because it helps them compare the options. It's not always smart to just go for the highest return, and you have to weigh a low. That is, you have to weigh a high likely you are to actually get that return or lose money. Written that is a risk premium. This also important in models and professional use like a capital asset pricing model, which helps estimate how much return an investment should ideally give when you consider it's a risk level. On top of that, the thinking about risk premiums can encourage people to diversify or spread out their investments just by having a mix of assets with the different risk premiums, that you can try to strike a balance between aiming for a bigger returns or not exposing yourself to unnecessary risk. And there's a types of risk premiums also we have. There are different reasons why investors want extra reward for taking risk, and also there are different types of risk premiums. For instance, equity risk premium is the extra return people expect when they buy stocks instead of sticking with the safer options like government bonds. Stocks generally swing up and down more, so the premium can be bigger with that. So then there is something called credit risk premium. That's an added reward for lending money to borrowers that might not pay you back, like a company or country with shaky finance. Okay. And another kind is a liquidity risk premium, some things you can invest in, like certain real estate or rare collectibles, aren't easy to sell on short notice. So, to make it worth your while, those investments might need to offer a higher expected return also. So, and currently, I wanted to share you with the cryptocurrency risk premium too. So cryptocurrencies comes with their own kind of risk premium because The crypto market is still fairly new and can be very volatile. Investors usually expect the higher potential returns compared to traditional investments like stocks or bonds. While Bitcoin is considered the safest option, altcoins tend to bring much higher risk. So things like price swings, changing regulations, reg pulls, hacking risk, and shifting narratives all add more uncertainty to the crypto investment. Okay, let me tell you how to calculate the risk premium. So working out the risk premium is pretty simple, and you just subtract the return you could get from the safe investment like a government bond. From the expected return on the risky choice, for example, you can think a stock could return you 8% a year and government bond pays 3%. So risk premium would be 5%. So this number isn't set in stone, but how big or small the premium is can change a lot. And which is depending on what's happening in the markets and how investors are feeling and what makes the investment special or unusual. So, what can impact the risk premium? Because the risk premium, this will go up and down all the time. Things like the overall health of the economy or a sudden shock to the markets can make investors want more compensation for a risk, or sometimes they are willing to settle for less. So the uncertainty, when uncertainty is higher, the risk premium tends to increase. When things seem stable or everyone feels confident, the risk premium can shrink. So it also comes down to details about the investment itself, and investments that are new to the market, difficult to sell quickly or very volatile usually have a bigger risk premiums. Big news or macro events can also have an that is immediate impact on risk premiums across an entire industry or country. So just by understanding the risk premium is helpful for anyone trying to make smarter investment choices, knowing what it is, how to calculate it, and what might cause it to change gives you a better shot at building a portfolio that matches your goals and how much risk you can handle. Even at the end of the day, the risk premium reminds us that if you want a short or bigger returns, you will almost always have to take on some extra risk. So this is tricky. The trick is to figure out when that trade-off makes sense for you. Let me continue with the Bitcoin treasury strategy. So, Bitcoin treasury strategy consists of a company adding a Bitcoin to their strategic reserves. So, some do it in a more passive way, while others use their BTC holdings to create the innovative financial assets, and such as which is a convertible debt and yield bearing instruments linked to the Bitcoin price. And companies that can leverage their strategic Bitcoin reserves to potentially improve the capital efficiency, hedge against inflation, and attract the new investment opportunities that do possible. So I will tell you what is this Bitcoin treasury strategy was. That we can picture a company's treasury as it's a piggy bank. It's where they keep money to pay bills, handle unexpected costs, or fund new projects. A Bitcoin treasury, this is a strategy they are using when a company decides to put some of that money into a Bitcoin, which alongside or instead of traditional assets like cash, bonds, or even money market funds. This is a available thing, and the companies like strategy, many companies that I can name a little bit, or Tesla. Yeah, we know Tesla, and even GameStop started adding it to their treasuries. So strategy, formerly micro strategy, which allowed itself Okay, so it's about they alone hold about the count of BTC was over five. That is maybe it's equivalent to 576230 count. It's a number of count which I the random count I'm saying, and it's the worth is $61 billion. So which is in a every month we can say the different count. So why companies will adopt this Bitcoin treasury strategies? The companies adopt the Bitcoin treasury strategies for the different reasons. I will tell you the reasons why they are adopting it, because each addressing a specific financial and operational goals. The potential benefits include enhanced global liquidity, value preservation, capital growth, and much more is important. And that's a reason also. First thing we can see that liquidity and flexibility with that. Bitcoin's global fungibility and 24 by 7 trading that can be provide more of liquidity and the flexibility for companies. So for the companies with the international operations holding Bitcoin, that can be used to simplify the cross-border transactions. And next thing is a hedge against inflation. So, due to a Bitcoin's fixed supply of 21 million coins, many argue that it can be used as a hedge against a fake currency devaluation, especially in regions with a volatile economics. Unlike the traditional currencies, which can be inflated by central bank policies, Bitcoin's scarcity offers an independent store of a value. Third is the diversification and the investment potential. By holding this BTC, companies can diversify their treasury portfolios beyond the low yield bonds or cash equivalents. And Bitcoin's historical price growth through not a guarantee of future performance, which attracts the companies seeking long term capital appreciation. For instance, many things. So the example, we can say the Michael Saylor shift to a Bitcoin centric treasury strategy has redefined its strategy. Okay, so yes, so that Michael Sayer, which shift to a Bitcoin centric treasury strategy has redefined the strategy valuation, with more than half of this market capitalization was tied to Bitcoin holdings too. And next, which has attracting new investors. So Bitcoin treasuries allow the companies to tap into the institutional capital pools that would otherwise be unable to access direct crypto investments. By offering BTC linked to the financial instruments such as convertible debt or equity tied to Bitcoin's value, companies can provide the indirect crypto exposure, appealing to a wider range of traditional investors. And the treasury strategies that is certain um, steps is there. How it's work? That the step I will share right now. What are the steps? How it's gonna work? That how the Bitcoin treasury is gonna work? That I will try to share right now. So first thing, the planning is very important. So for that, they want to take a plan first. So companies they decide how much Bitcoin to hold based on their risk tolerance and cash flow needs, as well as strategic goals. And some companies like Strategy allocate a significant portion of their reserves to Bitcoin, while others, like already I told, mentioned about the Tesla, so maintain a smaller positions related to their market cap. Step two, next, after the planning, they need to buy the Bitcoin. So to get the Bitcoin, companies that might use a spare cash, take out loans, or sell a stock. And GameStop, for instance, sold debt in March itself. So that could turn into a stock to buy a Bitcoin, which got investors excited and boosted its share picture. Sorry, share price. Okay, so next thing, after making a buy, so of course we have to keep it so safe. So, given Bitcoin's decentralized nature, secure storage is critical. So, companies usually partner with the qualified custodians to protect against fraud, theft, or hacking. So, that's another thing we have to keep it safe. And the next step is, of course, the financial products. Bitcoin lets companies think outside the box. They can create new financial products tied to Bitcoin's value, such as a convertible debt and yield bearing instruments. So, this may increase the interest in the company's stock without the need to change its main business model. Next step is to ensure the compliance and the crypto rules are still a work in progress. So companies have to stay on top of regulations. Ideally, they should also use a mark to market accounting, which means they update the Bitcoin's value on their book regularly. So price volatility can lead to unrealized gains or losses, which impacting earnings and balance sheet stability also. And whatever it might be, that there is a risk is possible. So potential risk with that is volatility, security, and destruction from core business. That too we'll discuss. So with the volatility, Bitcoin price fluctuations can cause a earnings volatility and liquidity risk. Depending on the strategy adopted, a sharp decline in the price Bitcoin's price could strain a company's financial position. And the next thing is the security. While the Bitcoin offers a cross-border liquidity and a flexibility, companies must remain the vigilant and implement a strong custodial measures to prevent the hacks and fraud. Finally, it's a distraction from the core business. In some cases, a heavy focus on Bitcoin may divert a management attention and resources from the primary operations, which may raise concerns about the company's strategic alignment. So, with the Bitcoin treasury holdings of publicly traded companies, some of examples I will try to share. Of course, Tesla. Um, Already we have seen some more examples already with the Tesla, I think so Bitcoin treasury strategies are shaking up how companies handle their money, turning their cash reserves into tools for creating the capital, managing cash flow, and attracting the investors. Just by leveraging a Bitcoin's unique properties, companies that can potentially hedge against the inflation, diversify reserves, and attract new capital. So, as the crypto adoption continues to grow, a Bitcoin treasury strategist can often it will offer an interesting alternative to traditional treasury management also.